Hi class, and welcome to this video for VCE Year 12 Economics, Unit 4 Outcome 1. And in this video, we're going to focus on budgetary policy, but specifically, we're going to look at the relationship between budget outcomes and how that is going to impact government debt, and we're going to call this public debt. Now, if we look at where this stands in our key knowledge list, this is our 5th key knowledge point. So it's going to make the assumption that you have understood previous videos or key knowledge points, and we know what budget policy is, revenues and expenses. We understand what a budget deficit or surplus is and how governments are going to have to finance that deficit and how they might utilize a surplus. Because specifically this video is going to really be hopefully a short video that looks at the relationship between this outcome, which could be a deficit or a surplus, and how that's going to impact it. And it's relatively simple, and it's hopefully pretty logical. Theoretically, a government will either have a budget deficit, so we have more expenses than receipts, or budget surplus, where we have more receipts than expenses. Now, if you have more expenses than receipts, you're going to have to borrow that money or finance that money. Now, logically, that means taking out more debt. So deficits equal more government debt, surpluses equal less. But we're going to go into a bit more detail to see if that relationship holds true. So let's just cover this off quickly by looking at our slides. Budget deficits require funding. This usually comes in the form of government debt, and we've seen that there's a number of options. This typically comes from the sale of government securities or bonds. So selling a bond, getting the money for that, repaying that money to the investor at a later date along with interest. That means deficits are funded by debt, and the debt will continue to grow if budget deficits are handed down each year. So if we look at the Australian budget, and we've looked at that in previous videos, you can see that there's a pattern. But if we specifically focus on since roughly 2008, you can see that we have been in a period of budget deficits. We know that we can split this into really two sections, and you can see that this goes into 2025, 2026. This is our estimates, and we'll look at what those estimates are. Prior to COVID, so leading up to about here, so we'll put a line here, these were deficits because there was low growth, low inflation, and governments were taking an expansionary approach to try and drive economic growth. Then COVID hit, and governments needed to have really large budget deficits to expand the economy, support workers, make sure that the welfare, they had income, receipts went down because people were out of job, and they needed to support their country, support their citizens with JobKeeper and JobSeeker to get them through the COVID pandemic. So theoretically, you would expect that since 2008, because of these high budget deficits, we would have an increase in government debt because that deficit has had to have been financed. Now we can see prior to that, we did have some surpluses. So there was the potential for some of these deficits to be funded by savings with the RBA, but that was not going to be sustainable. So we would expect debt to go up. So let's see if this relationship holds true. Firstly, I'm going to show you, and this is the relationship between the budget outcome and the level of debt. We expect, as we have more deficits, this should equal more debt. Now here we have, as we said, the underlying budget outcome, the amount of budget of deficits, and this is in billions of dollars now, and you can see that although the numbers have changed since there was an estimate of a budget debt of $200 billion for 2020 to 2021, and ongoing budget deficits. Now, has that translated into higher net government debt? You can see at 2008, the green being net government debt, we were roughly actually in positive. So we had not much net government debt. Since then, as we have had higher government deficits, and you can see on the right-hand side, they've been quite high government deficits, government budget deficits, you can see that our net debt has continued to grow and continues to grow to the point that it is likely to be above almost $900 billion, maybe even more after 2024. So you can see there is almost a direct relationship. As budget deficits have come through, and we've had budget deficits essentially since this point, that has continued to add to our net government debt. So now that we understand the relationship and we understand that it is occurring in Australia, what does it actually mean? We know that the federal government's goal is to deliver budgets that drive macroeconomic goals of full employment, low inflation, strong and sustainable GDP that improves living standards. And it typically understood that the government should be maintaining a sustainable budget position in the long term. So not having ongoing deficits. Having deficits when the economy needs to grow, having surpluses when we need to rein in inflation. And having this right fiscal balance theoretically avoids high levels of government debt caused by these big budget outlays, big budget deficits. And there is a warning because a number of countries, particularly in Europe, Greece, Italy, Spain, and Cyprus, and Portugal, and Ireland, to name a few, are all examples of what happens if a government continues to run big deficits. Gets to the point where they potentially can't pay it back. Credit rating goes down, interest rates on the debt goes up because of a credit rating, and this becomes a bit of a deadly spiral because then they can't pay the debt back even more, reducing their credit rating, and it becomes a death spiral for that country. So having good fiscal balance is often a goal of a government. This refers to strong and sustainable position of the budget, where over the medium term, budget surpluses are created in booms, and these are sufficient to pay for the budget deficits during recessions, without the need to have significant borrowings. So during the good time, have surpluses, save that money for the bad times when we need to expand the economy and have budget deficits. And this means that our net debt should be balanced. And you can see that that hasn't really happened in Australia. Now, the counterpoint to that would be COVID has been a one-off that was not seen before. And we knew that, and many people, it'd be hard to argue that there shouldn't have been high deficits then to support the people. And there's also the argument that debt isn't bad so long as you're using that money effectively to invest, grow your economy, and as long as you can pay it back, that's okay. And in the time now when interest rates have been really low, although they are growing substantially very quickly at the moment, it's not a bad thing to be taking on debt. So what does the 2022-2023 budget say? We're going to continue to have deficits. And we've talked about them in previous videos. The underlying cash balance here says that in the budgets up to 2025 and 2026, we're going to have about $224 billion aggregate amount of budget deficits. Now, they are going to progressively get smaller. You can see the smallest deficit is $43.1 billion, and that's in the 2025. And $134 billion was the actual deficit in 2020. So it's getting smaller, and it's getting smaller as a percentage of GDP. But you can see that this is meaning that our gross debt is going to increase from $817 billion to $1.16 trillion over the course of this time. You might notice, however, that it is really slowing as a percentage of GDP from 2023 to 2026, as theoretically, even though net debt is going up, the GDP should grow as well. And this is because in the budget papers, the Conservative government, which is no longer in power, so these budgets could change, and they in fact almost certainly would, this government said that they were transitioning to a medium-term phase of a fiscal strategy, with priority being placed on the economy to reduce their debt post-COVID and rebuild fiscal buffers, rebuild a fiscal balance. This puts the budget, Australia's funds, in a strong trajectory as the Australia recovers. So the plan of the Conservative government was to start to have fiscal balance and start to hopefully rein in those deficits. Now, whether that was going to happen, who knows? And in previous video, we talked about how the outcome can differ from the estimate to the actual due to a number of reasons. And we have a different government now, which will have potentially a different plan on how they're going to achieve fiscal balance. But for now, I hope that this has given an understanding of a pretty simple and logical relationship between the budget outcome and the amount of debt. And simplistically, as we have deficits, and particularly as they grow, we're going to have more government debt. And as we have surpluses, logically, this will give us the opportunity to pay back some of that debt. And in the medium term, long term, it is logical that we should be trying to balance our deficits and surpluses so that we can fund our deficits with surpluses, but that hasn't been happening in Australia in the recent history due to a number of reasons. Hope you've understood that relationship and understand where Australia stands, and you're building up your understanding of budgetary policy.